All right, the Fed is set to kick off its two-day policy meeting today, and the markets are also anticipating that big CPI inflation report that we're going to get this week. For more on that, the markets and the Fed, we want to bring in Darryl White. He's the CEO of BMO Financial Group. He joins us from the 2024 U.S.-Canada Summit in Toronto. And Darryl, we were just talking about what to anticipate from the markets and what to think of the Fed coming. Steve said basically you're looking at a shot, maybe 60% shot of getting a cut sometime this year. You are still of the expectation that we could potentially get two cuts this year, right?
Yeah, we are, Becky. First of all, good morning. Thanks for having us on. We are in that expectation. I think we're in. I would say we're in the slim majority from Steve's report. We're looking for one cut in September and then another one in December. So 2 quarters by the end of the year.
And you think that that's necessary or that it's not? Because you also think that inflation is pretty sticky. So what's the Fed to do?
Yeah, I mean, yes, inflation is pretty sticky. And look, I'm sitting here with you from Toronto right now in Canada, where we watched the Bank of Canada move just a week ago. But we have a situation here that's a little bit different, where we've got unemployment that is much higher, around 6%. But we have price control. We've got inflation below 3. It's at 2.7, 2.8. So when you've got a situation where, yeah, you've got some stickiness on inflation, but you still have some pretty good full employment in the U.S., it's a tough call. And I think that's why you're seeing the survey come back at 52% and not at 80 or 90.
Answer the question that we were just debating at the end with Steve. What do you think, just in terms of whether we're looking at a situation where there's a lot of liquidity in the market? Is the Fed actually, is its policy at this point restrictive? Are rates high enough?
It's not clear that it is restrictive yet. And I think that's why you don't see anybody calling for a move. You know, I remember last time I was talking to you all, we were talking about moves by now. But it's not clear that the policy is restrictive yet. When I look at other regions around the world, you see the effect. You see the transmission effect. But given full employment and given the price stickiness, it's not clear.
So we have the Bank of Canada and the ECB both cutting rates. It puts us at a different position to see how that's going to affect capital flows. What is the impact for the market in the meantime?
Well, the impact has been pretty muted, I think, in most places in the world, other than in the U.S., where we're hitting new highs, of course, every day on the S&P and the Dow and the NASDAQ. But I do think that there's something to what Steve had to say at the end of the last segment, Becky. There is clear evidence that companies are figuring their way through productivity gains and approaches to managing through this environment. So, you know, we do have to give credit to the productivity and to the strength of the underlying economy.
So you see the new highs in the market and you are not afraid. You think it's deserved.
Well, I didn't say I'm not afraid. I mean, there's a lot of volatility. There's a lot of things that could go sideways, mostly geopolitically. But in the meantime, until and if we see that, you can justify the valuations that we see in the market today.
And what are you telling investors to do at this point?
We're asking investors to be pretty cautious. We're saying to folks, we think you should be fully invested, but at the same time, we should be careful as we lead into the fall, as we lead to more geopolitical risk, and as we lead into the election in November.
But the areas that you like, would it be technology, which has been leading the way to this point, the AI boom that we've seen?
Yeah, we do like technology, Becky, but we're also diversified in our point of view. I mean, we think that you've got to have a vast profile on the portfolio, and we do think looking across sectors is pretty important, particularly in moments like this where the volatility is at risk of increasing. We don't see it increasing a lot today, do we? But we do think that there's significant risk as we go into the fall that we'll see a lot more volatility. So invest for the summer and be careful in the fall.